Well, reviewing the numbers that were released on Tuesday, the market certainly enjoyed them, moving up dramatically throughout the morning and into the afternoon session. Um, the, for the most part, companies beat their earnings. Of major companies that released, there were really only two misses. One of them was Wells Fargo, which in and of itself, a lot of people would call that what they call a kitchen sink quarter, where you're getting a new leader in place. And so let's get all the bad stuff off the books now. So the market actually forgave them for that and moved higher anyway. So for the most part, market reacted very well to the first batch of earnings. There is one thing that I kind of worry about with the let's call them the initial returns in earnings season. They tend to be heavily weighted to banks. And banks can be a great indicator sometimes or a lousy indicator others, but it's hard to know that in advance. Banks are a quirky group because they really make their money differently than many other businesses. They're obviously far more exposed to the interest rate cycle, and that has a huge effect. And of course, then there's trading operations, which are completely different from pretty much any other business out there. So you're dealing in a world that doesn't provide a lot of clues to the broader economy. The one place that they are a great bellwether is if they tell you either that corporate lending is going great or corporate lending is going poorly. I'd say on that front, the returns are not really complete. They didn't say anything bad enough to get people worried. I don't know that they said anything great enough in getting people to say the economy is going well or corporations have this great demand for funds. And by the way, if companies don't have a great demand for funds, you got to wonder what the benefit of further interest rate cuts are, because the whole point of those is to spur borrowing. It is going well on the housing front, and that's another thing where the banks are sort of, I'm going to say idiosyncratic, because they're much more exposed to mortgage lending in a way that really no one else is exposed to the housing market, with the exception of home builders in the way that they are. So what I would say is we're off to a good start. The fact that most companies beat, well, that shouldn't really be a big surprise, because for the most part, companies have gotten very good at managing their earnings, managing expectations. And at least the first set of bellwethers coming out, I think we're in pretty good shape. Whether or not that persists, I really don't have enough information to tell you right now. I think for the bullish argument, it would be, sure, this is great. We're off to a great start. But the one thing my experience tells me is don't get too carried away by the first round of earnings releases, especially when it's bank driven. Let's see where this goes once you get into the broader economy, once you get a better sense of where businesses are, and once you get a better sense of whether expectations have gotten too negative or just right. As of now, we're looking okay.